Morning guys, we'll look at the trade setups using the short delta, long delta, and the delta is simply the change across time. Now the thing is with Aussie CAD is that we should be negative in so much as it's the strongest sell if we look at the short delta, but yet we're positive. So this is being slightly naughty. This particular candle is possibly fake because what should happen is that the herd aren't going to get paid. That's like the thesis. That's the driver behind the sentiment. Okay, this was maybe worth noting that the euro has really moved over here as well. They shorted the euro and they've gone long the yen. Okay, so Aussie CAD. So what I'll do is I'll drag this across. Do note we've got Aussie CAD, the euro pound, we've got CAD yen and dollar yen. So we'll just refer to those. Okay, so Aussie CAD, this could be a good setup to sell into this support. So we can look at this tomorrow. We could probably enter at market because we've got a good risk to reward. Get that down and then maybe put it there. And we've got a decent risk to reward. It's 1.6. You could theoretically do this. And then you've got a massive risk to reward. But it's up to you if you want to place an order. If you want to enter at market, you've got a significantly worse risk to reward. If you be a bit patient, you can have a really good risk to reward, but we shouldn't really pump because it's the strongest sell. So it may not do that. So what we'll do is just do it at market, and then we can see how we go. So 1.6 round about there, okay. And then we'll suggest in euro pound. So that's of note, and so this could be good. We could probably target this one, depending on we go above. Say we break that wick, actually that could be our entry. Long position, so we want to enter above that wick. Stop's going to be, maybe it can be applied this wick actually, and we're going to target up here, target that. It's a really good risk to reward. It's 4R. So what we want to do is get a break of that range high. The stop loss is going to be there. It's a 17 pip stop loss, so it's quite affordable, it's quite cheap, and we want to see a break of that. So that's the EG. CAD yen, dollar yen. So this could be a bit tricky. So this should be falling, and it isn't. So it's being currently naughty. So that's currently correct. Is that this candle there, that red candle, that's fine because according to the spreadsheet, CAD yen is a sell. Okay. So that's naughty, okay? That daily performance is a bit naughty. So likewise, we could just probably enter a market. Let's get rid of the old one. And yeah, it's already fallen quite a bit, but there would be your stop loss. And I'm not sure your TP would be. So this could be a bit of a tricky one. Yeah, I don't know where your TP would be because we've fallen quite heavily. Yeah. Oh wow, down here maybe. Maybe here. Maybe that's a good place. Yeah, look, that's quite good. But it's a less than 1-to-1 risk reward, so not really a very good trade. So I'd probably avoid this one, but it should have legs to the downside, but I don't know where the TP would be. And lastly, of the 4 trades that the robot 2.0 is taking automatically, dollar yen is a buy, and we've got to keep an eye on the yields. The 10-year yield pumps is going to push dollar yen upwards, so that's a good tip. Okay, they correlate very well, and so we could look for a long up here. If you remember last week, I was saying to short the dollar yen. We're looking for a retracement into the box and then sell, and it was really good. I didn't have an ambitious TP, and we took profit about here, but it really did move to the downside. So it was a good setup last week if you caught it, and now it's looking for upside, but you probably want to keep an eye on that 10-year yield. Okay, so you could wait for that to go positive and then enter. That could be a good one. Let's look for a long. I think we'll probably just go above that box, and we're going to stop here, and we're going to target that, just the bottom of the range there. It's 2.42R. They're your trade setups. I would probably avoid CAD yen because we haven't got a very good risk to reward. but it might fall, to be honest, and you probably want to keep an eye on the 10-year. So just to wrap up, we had Aussie CAD sell, Euro pound buy, CAD yen sell, dollar yen buy. Okay, and don't forget the bot is taking these automatically. As soon as they trigger, we get them into the MetaTrader. We've got a lot of testing to do still, because what it's currently doing is pinging 4 trades every hour. Every time it triggers, it will trigger another 4 consecutive at once. And of course, by doing so at a regular basis, it's going to really eat up the margin. So that obviously needs testing, and obviously we want to see the results as well. If we get phenomenal results, then it doesn't really matter about the margin, but it's going to be a bit of a risky bot, I think. The old bot's going well, but we're seeing a lot of whips on the Euro USD, as you probably would have experienced if you're trading it. And so that's it. So see how we go. It could be a good one. I remember to keep an eye on the 10-year, and you could even wait for that to go green, and it's like a double tick for this particular trade idea, but we should be going higher according to the volume delta. Okay.